All right. So for those that might watch this at a later date, it's April 21st, 2015. Dr. Keppler has come to contribute and talk about volume and market delta with profiling. John is an author of now two books soon, right, John? The second book is due out this
That's
year.
that's correct. Yes.
And John's actually tackled the weakness of profiling, and that is trading the darn thing and executing with, well, he'll get into some of it, but executing anything is the most important part of it. And I'm a big fan of profiling. I didn't know much about it when I started trading, but I taught myself what I want to understand from it and been able to bleed over my execution skills with the skills and bias that market and volume profile give you. So, John, we'll stop when you want to stop to answer questions, or we'll stop at the end, whatever you want to do, and whenever you got to get out of here, you just let me know. But I appreciate you coming.
My pleasure. My pleasure. And sort of as a segue or to piggyback on some of the things that you were saying, first let me emphasize the idea that the profile is merely a tool, just like any other technical analysis tool. And certainly it helps us in our analysis and in better understanding the market. But it will not do anything for us in terms of effectiveness of execution or how we trade and so on. Just like any tool in the world, if you give it to a skilled craftsman, they will work very well with it because they appreciate the tool, they know how to apply it, and they integrate it with all the other tools that they use. But someone who thinks that sort of the profile alone is adequate or enough, they're going to have a struggle. There are a lot of other things that we need to be looking at and to have in the toolbox and in the tool chest. Now, having said that, I don't want to belittle the power of the profile. It is important and it's a powerful tool, but nevertheless, it is just that. It is a tool. And there's a lot more to the world of trading than just a single tool. And so when you hear somebody say to you, I'm a profile trader, well, what does that really mean? A profile trader, if they're just using the profile alone, really is limiting their repertoire, their capability, and their skill. A trader is a trader. Tomorrow, next month, another tool might come along. If that tool is good and effective, I'll use it. You should never be married to a single tool or a single technique. Always work to expand your knowledge and your repertoire of tools and techniques. And what we are going to look at today is sort of a byproduct of the profile, but not necessarily looking at all the elements of the profile. But we will integrate some of them in some of the work that we're going to do. Now, let me go ahead and begin with the presentation. And as usual, we just have to make sure that everyone is aware of the risks that are involved in trading and the fact that past performance is never a guarantee of future performance. So please take a look at the disclaimer and read it carefully and make sure that you are aware we're doing this strictly for educational purposes. All right. One of the things that the profile helps us to focus our attention on is market activity. And nothing represents market activity better than actual volume. Volume is the fuel that moves the market. Now, any volume relative to the conditions that are going on in the market may move the market. But what is significant and what we really need to focus our attention on is high volume. Why are we interested in high volume? Why does it warrant our attention and consideration, and why is it helpful for us to track high volume? Because it indicates major capital involvement in the market. Major capital certainly is not going to come from individual participants in the market. It is going to come from the major participants in the market. These are the participants that have the capability and the wherewithal to move markets. Certainly not me, not 100 others like me have that capability, but large institutions, major banks, and so on, they are the type of players that can in fact influence the market and do influence the market. Now, of course, they know that. It's not a secret to them. So they try to conceal their footprints, if you will, or their movements throughout the market. And our job is to try to look for them and to do our best to identify them. And that's what we're going to look at. And I'm going to show you how helpful it is and how it can really enhance your decision-making process when you have a better understanding and of the volume flow and the tracking of the key volume nodes in the market. I'm going to begin with a very simple and common chart, a 30-minute footprint chart. Now I have a number of things on this chart, and we will talk about them in the course of our presentation as we progress, but let's at least begin with the beginning. Any day that I'm going to do any intraday trading, I always look at where was the prior day's close. And of course, since I had to prepare this presentation a day in advance of doing it, I used the close from last Friday. So it was really the end of the week. And then naturally, I'm going to look at the open Sunday evening at the beginning of the week. And so this prior day's close that you're looking at here on the chart is really the close for last Friday. So we're not going to be looking at very long history. This is very, very recent history. And here is the close. It looks, I can't see the yellow on my screen, but maybe if I use red here, it will highlight it. There's my prior day's close. Now the next thing I want to look at right away is where do we open? And there is my days open. So I've got the overnight open and I have the prior day's close. And what else is important to me? What else should I look at? Where are they relative to one another? And one of the most important things you want to look at is that gap. How much of a gap? Did we gap up? Did we gap up? Did we gap down? And notice in this case we had a significant gap. Okay. All right. And the gap was we had the close at about 2075.50 all the way up to 281. First thing I'm going to share with you, which is an important rule to know in trading, whenever you have a gap, if one of your 30-minute candles closes below the midpoint, and that's what this red dotted line is, it's the midpoint of the gap. If we close below it, there's a very high probability that, in fact, we are going to fill the gap. Now, notice what happened on Friday, Sunday evening when the trading opened. We opened up here, we dropped, but we never closed below the mid of that gap. So anytime you see a gap, go ahead and draw a line indicating the mid of that gap and watch what happens. And you will see that there will always be an incredibly high probability. My first tip for the day, if the first 30-minute bar closes below 50% of the gap up halfway, very high probability the gap will fill. Now notice in this case it did not. The first significance of this is we are in a bullish state. The market is quite bullish. First of all, it opened gapping up. Second of all, it did not, and I repeat, fill the gap. So that gap was sustained, and sure enough, you saw that Monday the market went higher and continued to move in a bullish fashion. Now, tip 2 is always look at where the open is relative to prior day's close before you place any intraday trades. So when you see that the overnight open and then the day open is also above the overnight open, that's another indication the market is rather bullish, and then we have to watch what is going to happen and where we end up closing, whether it's above or below the day session open. But the important thing is to highlight these key reference points, the opens relative to one another. So you see the reference levels we should always track and look at before we begin to do anything. Before I've even begun to look at volume or talk about volume, I need to know some of these key reference levels on my chart. Now, the next thing I do to track the volume on my chart is I begin to use the KVT. And I don't know if any of you are familiar with it or not, but it is an indicator that is available at no cost within market delta. Now, once you begin using it, and today I will help you to see the benefit and the value of using it. Once you begin using it, you will really reap the benefits of that indicator. The indicator is an algorithm, and what the algorithm does is it takes a look at any time bar and identifies for us high volume price levels within that bar. And it identifies two levels, because if we just said high volume, well, how high is high? And I could have identified level 1, level 2, level 3, level 4, but for the sake of simplicity, I decided to make them just two levels, intense and very intense. And very intense could get really, really intense. You can gauge that by looking at the numbers. Now, the nice thing about the KVT, there is another indicator in the multiple price highlighter indicator where you can choose and set a volume level, let's say anything above 5,000 contracts, highlight that for me, and it'll highlight it, and sure, it'll show you anytime we have a price level greater than 5, 10, 20, whatever setting you choose to use. The difference between it and the KVT is that if you choose such a high level that would work in the day session, it's not going to work in the evening session because the volume levels are very different. And not only that, different days have different levels of activity. But the KVT actually takes that into account. And that's why it can only be used on time bars, time charts, and you cannot use it with other periodicities because it actually looks at within this time frame, within this same period, would this be considered high volume or not? So I usually like to use two different colors for level 1 and level 2, and in this case on the chart, the light green is my level 1 and the dark green is my level 2. And if you notice on the bar, the very first bar of the day, that first 30 minutes, I had quite a bit of intense activity in that bar. So it tells me from the onset, when we gap up, that major players are up and participating in the market. Notice also what happens in this bar. It drops, and in spite of all this intense activity, it did not end up closing below the mid as we showed on an earlier slide. Now take a look at what happens in the following slide. I'm sorry, in the following bar. We have, again, intense activity, but we don't take out the high or the low. So we have an inside bar, and so basically we still have heavy participation relative to this time of the day or of the 24-hour session, but no change in direction yet. And you'll see that very often in the evening. Things move at a snail's pace. For any of you who have ever watched and traded in the evening, you know that more often than not, the market just moves very, very slowly. And so we continue with the inside bar. At this point, I would do nothing as far as trading because I have not taken out a high, I've not taken out a low. I'm pretty much staying within that range. So all this tells me is major participants relative to this time of day have been involved in the market, and we have to wait and see when they come back to participate again and what happens to my price range. And notice the next point when they come in is right about here, and take a look at what happens. The prices start to go up a little bit. Now, high volume alone cannot tell me whether these are buyers or sellers. I just know that it is an area of high participation. A lot of capital is changing hands. And you know that even if I have 1,000, 10,000, 50,000 contracts traded, there is a seller and there is a buyer on the other end. So, volume doesn't really tell me whether it was buying or selling. We could begin to take a look at the delta, and that will help us sometimes, not all the times. But if we do that here, we will find that we started out with a positive delta and a negative bar, but we are above the zero, which is always a bullish sign. And we continue on with the next 2 bars, 3 bars, we're still above the zero, and we start to get positive delta. And we already knew that we were in a positive bias to start with because of the gap. Now, let's also continue to see how this volume how these high volume price levels continue to help us. In this case, when we came up to this level, take a look at what happened the following bar. Prices drop. And where do they drop back to? They drop back to the high intense levels. So I begin to identify that in this zone here, I have buyers which managed to push prices up, and here, this intense activity, it seems that the sellers had a slight advantage and pushed prices lower. Again, in the evening, this moves slowly, but when we get to the day session, you will see that this rapidly shows us how things change. In addition to the KVT, there is another really useful indicator in the same multiple price highlighter also, which I call the cage. But basically, the cage begins to form. It's these orange bars when we have a price level that is visited more than 5 consecutive bars. So if I have 1, 2, 3, 4, 5, the cage begins to form. And these cages become very important levels of support and resistance. And then I begin to track my high volume relative to the cage. The cage now is telling me we've visited this price now. How many periods? 1, 2, 3, 4, 5, 6, 7 periods. And what's happening to my price range? It is moving higher. What is happening to my high volume nodes? They're starting to occur higher and higher. They're not occurring below the lowest level 2 or level 1 that we had back here. On the other hand, they're actually starting to occur higher and higher. Now we begin to see the market start to move higher, and consistent high participation, high volume participation in the market. You can see it with the level 2 here, the intense green, light. And notice when you get high level here, and it'll vary from one bar to the next, prices drop a little bit. That means in what happened here was the sellers were actually the more dominant force at this price level at that time. That changes. And what you want to look for is the overall trend, not a single bar or a single price, but the overall trend of what's going on in the market. Let's continue on with our tracking activity, and let's take a look at what happened at this bar here after we got out up above the cage. Look at this intense activity, and this often happens when you get a lot of intensity. That means there are a lot of sellers and a lot of buyers interacting in this zone, a small little value area, if you will. Look at what happens the next couple of periods inside bars. So the market hasn't sorted out yet who is the dominant force in this high volume activity, and it will take usually a little bit of time. And you don't want to rush or make an early judgment. You want to always wait until the close of a bar and to see where price range is moving before you take any action. Now, we have inside bars here, so really I would do nothing. I mean, in this zone, I know that I've had a lot of activity here. I know that my bias is bullish, but things could change. some new intense activity could occur at any point and take prices back down again. And that's the beauty of the volume. I have something to hang my hat on. Now take a look. I just want to show you when we looked over here, it also helps me to identify a key level of support and resistance. At the very beginning, here was my support, and there's my resistance. And as I move along with my high volume nodes, let's see how this support and resistance has changed. Now take a look. Because the high volume is up above here, obviously this must have been buying activity, or I should say predominantly buying activity. The buyers were the dominant force here, and as a result, take a look at what happened in the following bar. Now, what happened here? Well, we had intense activity again, but we had resistance because we weren't able to move higher, and we started to consolidate. So it doesn't mean that the buyers are completely out of the picture or they've been overtaken by the sellers. It just means that they met with some resistance. And so notice how this also begins to identify for me important levels of support and resistance as we move throughout the day. So the tracking of volume is very, very helpful. Notice the level of support, the level of resistance continues on through the day. Okay, I'm going to move a little bit faster here. Now notice, I begin to get level 2, level 2. What happens? Range drops. I get some more dropping and a little bit more down here, and the price range drops. After the close, we see that. Now, quite often, once you begin to see a red candle and the range of that candle to the downside gets taken to a lower level, prices will move back up to retest these key levels that brought it back down. These then become good selling opportunities. We know the range has dropped lower, and we've noticed we had a high volume node. In this case, there wasn't much of a move to be had because I knew if I would have been selling, I'm selling into support, and I'm coming right up on the support, these same buyers here, and we will soon find out whether they will rise to the challenge and start buying again, or whether we will continue to break this level and move lower. So we come down to this level, and for the first time I begin to see a bar with a higher close than the open, a green bar, and again some level 2 with a level 1 on top. So I still have intense activity here. But at minimum, this begins to tell me, since I had high level activity and a close above the open, then at least at this point in time, the buyers were the dominant force in this high level activity. Add to that the fact that when I look to the left here, I had a level of support, then that reaffirms for me that perhaps a buying opportunity may be at the door. Let's take a look and see what happens. And if you notice, sure enough, we take out the high and we continue higher. Now, by now, you should have recognized that we are going to retest this zone where we had encountered some sellers. This same buyer held their ground, if you will, and pushed prices back higher. And we can see the activity bar by bar based on levels of participation and these high volume nodes. So let me continue on and show you now. Now we get to the first candle of the day. The day's open, the day session open, and take a look at what. Sorry, this is we're still midnight. So it's day session, but that would be in Europe. And take a look at what happens. We break through the resistance level. Here's my level 1 KVT, and notice what happens right above it. Prices shoot higher. And now take a look at where my new resistance is. This is the next area where sellers were attracted to come in and sell at an intense level. This entire zone, I really, was. That's why we jumped up so quickly and so fast, we didn't have any sellers here. But sellers were attracted into the market at this level. So now I've got my new level of resistance and my new level of support, and let's take a look and see what happens then. We've got support, we've got resistance up here, and by the way, translate the words support and resistance, and support becomes a nice point for your stop if in fact you are going for a long, so that's your support becomes your stop loss level and your risk management level, and if you're taking a short, certainly the resistance level above becomes your short level. Now, I asked a question here. Now I've been sharing with you some of the logic that one uses in tracking volume. Now I want you to participate with me a little bit, and I'm going to ask you some questions. What is likely to happen next? We've got this big bar, and now you see intense volume here, and the bar closes below the high volume node up here, but still above support. And let me see if I can pause for just a second here and look at some of the answers. What do you think is going to happen? Are we going to move higher or lower? And just put an H for high and L for lower. Let me see. I don't know if I'll be able to see your answers or not.
I don't think you can see them, John, but I can. And they're all coming in, well, okay. 3 H's, 2 lowers, 3 lowers, 3, 3.
Good. That's what I like. They're confused. Good. All right. And that is confused. First of all, the reason I asked the question is because at this point, it is confusing. The bar closes lower, but certainly it's an inside bar. The correct answer really is it's non-conclusive. I wouldn't take any action based on what I see at this point. I know there's intense activity, but I really need to see a movement, either an extension to the range lower or an extension higher to make a decent judgment. And that's why we have to wait for the close and see what happens. So let's take a look at what actually happens. And by the way, folks, I want you to know that they don't do this by accident or by chance. They take out the high and they take out the low, both, intentionally, again, to keep it non-conclusive. So you really are not sure, because we did go a little bit higher and a little bit lower. But in this case, because I have another red close below this big chunk of volume, I would put more weight on us continuing to move lower. So now, even though we did go a couple of ticks higher and we did extend the range higher, ultimately the close was lower, and I would put higher money on the on a short here, and my stop would probably be right up here at this high volume node, and let's see what happens. And again, don't expect much in these trades. I know that my support level is right here, so I would be looking to take just maybe a point or two and exit very quickly when we arrive at this zone. Sure enough, notice here now we begin to get a little bit more intense activity, a little bit more high volume nodes. Now, the high volume here apparently was some buying activity compounded by a little bit more buying activity, and the way that we know that, the answer to this question, who is dominant here, this bar ended up closing above the open. So it tells me right away that the buyers are starting to become dominant again. Not only did it close above the open, but we didn't take out the range of this prior bar, and we did go a tick higher. So if in fact I wanted to execute a trade at this point, a higher probability trade would be to the upside, and we would probably be going back for a retest of resistance. So let's take a look and see what actually happens. I get an inside bar, doesn't continue higher. So if I did take a trade, I'm stuck in it. I haven't been taken out because my stop would have been back here. and then let's see what would happen next. All right, not looking good for me, but that's trading. And now also I really want to highlight for you the fact that I begin to get a cage start to form. The cages are really important because it means the market keeps visiting and revisiting these prices. And in doing so, are we moving higher or are we moving lower with our range? When we come up, is the pressure to the downside or is it to the upside? And if you take a look, based on what we see from the cage, really the momentum is now towards the downside. And here in this bar, I don't see any heavy volume, and that often happens. They don't, you don't always get the intensity. Sometimes they'll let it go for a bit, and then they'll come in at another level that is attractive to them. So take a look. Even though the window made it seem as if we were going lower, this shoots up higher. Here's what I would really like to highlight for you. Go up back again to a level of resistance, but the thing that I want to highlight for you is I don't see any high volume nodes. When you see moves like this that shoot up out of the blue like that, when you were expecting things lower without high volume participation, realize that this just may be a fake out, and actually things will come back in line with what was happening and the analysis. And I don't want to say that these are the market makers playing games, but sometimes there are rumors that these things happen in the market. So take a look at what happens next. We get a big red bar, and so all of the people that were that saw the trend and saw the cage and were going to go, knew the prices would head lower, all of their stops got hit back up here. Notice this nice cluster of volume, not really a high-level node, but a stop killing, because this would have been the place to put your stops. And once the stops all got hit, now we are going to move back in the order of the auction of how things were going to move. And then this is the first time I begin to see high volume again. Now, because the bar closed red, I really don't know what is going to happen next. I need to take a look and see first, are we going to take out the low or the high of this bar to determine who was the dominant force in this bar. So simply by knowing there's high volume here, that alone often is not adequate. I also have a negative delta here. So if I were to guess, I would say that we're probably looking to still see prices continue lower. Let's see what happens next. Was this buying or selling? We answer the question. We're really not sure. Let's see what happens next. I get an inside bar. Now notice that begins to tell me that perhaps this was not strong selling, but I didn't take out the high of the range. So at this point, it's still for me non-conclusive. So be careful with these inside bars without any additional intense participation. This is really sort of a continuation of that same move. So let's see what happens in the bar that follows. Okay, we now start to move higher, and I begin to change my support and resistance levels. I have now we know these in fact were buyers. We've taken out the high and we close higher than this range, and we close right into this cage that we had before. So what we want to take a look and see next is, are we going to be able to navigate higher than this cage or not? And let's go on to the next one, and you see we didn't. We came back down, and now we have the open of the day. This was the next bar. But notice, open or not, if I've been tracking volume and I had my levels of support and resistance prior to the open, this is very helpful for me at the open of the day session to know where those support levels are, because there's a lot of volatility. But if I have been tracking in advance and I have these levels there, so as soon as we begin to go outside that level and head higher, I know that I've broken a prior level of resistance, and that this is a breakout, and I can participate in it relatively early. Whereas if we had broken down here and continued lower, I would have thought, well, this is too strong of a resistance, we're going to continue to move lower. So take a look now, and let's see in that first bar of the day, where is it relative to the overnight session, which is to the overnight open of that session. And of course, in this case, it was quite a bit lower. Now, the reason that's a very, very important parameter to look at, the day session open relative to the overnight open, it helps us to gauge what kind of a move we had in the evening. And remember, for many people, this is either maybe a gap up or a gap down. So because we're working in a 24-hour market when we look at the ES Mini, whereas others who are trading stocks and so on, they only use the day session, and so they're going to find that the market is either gapping up or gapping lower based on the difference between that open of the day session and open of the overnight market. The overnight market, we opened at 2081, and the day session open in this case was at about 2085.25, so we had another about 4 points above it. And don't forget that we opened with a gap up from 1 week to the next as well. So this is really quite a strong bullish move. Becomes apparent right away when you begin taking a look at these parameters. So this is my very first half-hour bar, and take a look at how it shot up. At that point, when you see that happen, and you get a bar like that, and you also get high volume nodes within the bar that continue to move higher, you recognize that the trend of bullishness is going to continue. However, this is another very important observation here. What do we have here? We have intense volume activity at the top of the bar. That is potential resistance, and I should be careful in that area because, in fact, prices could drop lower, or they could present me with a buying opportunity. So these are the key levels I want to watch for in this bar. How far back in this next bar will price penetrate into these high volume nodes? And let's take a look at the next bar. The second 30-minute period, sure enough, because we did meet some resistance here, we actually do take out the high. We make a higher high with the bar, and notice we drop. We do take out this level that we knew about, but this level still continues to support us. When I see that and I get close to the closing, maybe a minute or so or 2 minutes before the close on this bar, I am a buyer because we made higher high, very bullish day. This level held, and very high probability now the next bar that's going to come along is going to take us higher. And sure enough, it did do that, just that, and it did take us up higher. Now, I begin to see heavy volume again here. This is to overcome the selling that was here, and so we end up closing higher here because obviously the buyers have now become dominant. And then more importantly, I begin to see high volume here and notice another very high level of intensity. Now, let's take a look at some of the other lines on the chart because these are also helpful to look at, and this is where the profile comes in. This is the high value area, the value area high for the 24-hour period. This would have been for Monday, for yesterday. And this is the value area low for Monday. So notice when we got to it, very intense activity, and we don't know yet, is this going to be rejection or is this going to be acceptance? We do have a very visible negative delta for the bar. So if anything, our bias would be to the downside, but we have been in an uptrend, higher highs, higher lows all along. So we may get a retrace at this point. Let's take a look and see what happens. We actually get another inside bar with more intensity, which is great for me because it now helps me to further define my support and resistance levels. Obviously, we weren't able to go lower, we weren't able to go higher, and I get this nice inside bar again with intense volume. And the question now, which are we going to break, the resistance or the support? Let's continue to find out. Another bar. If we are to continue dropping, now since we could probably lower our resistance a little bit. The resistance is up here. If we're going to drop, the key question I want to ask is, where is the next target for support? And I go to my volume levels, and this would be the area right here, the mid of this area. Always level 2s will be stronger than level 1, so I skip the 2 level 1s up above. I would be looking at this zone here. If we were to drop and drop down, this will be the target. If this does not hold, then we are going to continue lower, and we're going to retest this level down here, and then I have to look for other levels of high volume below. But let's continue on and see what actually happens. Okay, we also begin to form a cage, meaning price is spending a lot of time in this zone, a lot of contracts, trading hands, and we are starting to, in fact, drop. We break out of the zone that we had identified up here, and now I know that we are going to come back and retest this this key level right there. Let's see if that really holds true. Okay, we come right down to it, and we have high level participation up here. If in fact this level is going to hold, this level of high volume down here, if this holds, then I would expect for us to make a higher high in the next bar. If that does not happen, then we are going to continue lower. So let's see what happens. I make my higher high. I am ready for another long entry at this point because I'm now back in the trend with the trend. I have high volume up here. I make a higher low, and I have a higher high. I'm back with the moving with the trend. So let's see. We do come back up. Now we come back up to the value area high. The same area that brought us down. We know that this is a level of resistance that's being retested, just as we knew this was a level of support, and we came down to test it. We're coming back for a retest of this level here. And I can't tell you, based on this bar, really, what is going to happen. It looks bearish at this point, but things could change. No, it does come back down. Now, I begin to see intense volume activity here again. And the question becomes, are these buyers coming in to push us back up again, or has the selling intensified, and are the sellers now dominant, and are we going to see prices continue to drop? And hopefully by now you've learned that I don't have the answer yet. I need to take a look at what happens in my next bar. And by looking what happens, I want to look at the range and again the participation of the heavy volume. Now this is interesting. I get level 1 and I get a green candle, so I don't take out the high. So if anything, I'm still somewhat bearish, but I know that this is a support level. And now my range becomes better defined. I'm going to be long if I go higher than this range, and I'm going to be short if we drop lower than that. So let's see what happens in the next bar. Makes life much easier for me. And now we're getting towards the end of the day. And if you will remember, prices did drop precipitously or significantly at the end of the day yesterday. All right. That I walked you through an entire 24-hour period, really, tracking volume using the KVT. These nodes appear in real time, and so this isn't something that happens after the fact. And what I'd like to do now, I would love to answer some of your questions, but I also want to open up a live chart before you and show you now in action some of these things that we've been discussing. Okay, so let me get a chart that has KVT on it, similar to what we've been looking at, and take a look here. All right, good, we have some activity. Now, notice this is the last bar where we had some activity. And let me ask the question, let me verify that everybody's able to see the chart?
Yes.
Anthony, is everybody able to see my chart?
Looks good.
Okay, great. All right, now the other thing we want to take a look at, all right, and take a look here at my delta. Now notice, high volume, we had a positive delta. But the key thing is we're not above the zero yet. So we haven't gotten above the zero with the delta, and this has taken out the high of this bar. But if we were to look at our support and resistance levels, where is the last intense level that brought us down? And really it was up here. If you notice, this was the last time we had heavy market participation. This is where the big boys were last. And obviously, in this zone, the sellers were more dominant, and as a result, prices have dropped. Now we're starting to see some big boys come back in here again, but I would not be comfortable with a long until I clear this cluster here, because this is a more intense cluster than what I have here. And not only that, I am still also below my zero line with the delta, so my outlook at this juncture is still bearish if I were to look at it. But this could be a potential zone of support. But again, it doesn't look, I don't think, it's based on my experiences, based on what I'm seeing, it doesn't look like it. It may be additional selling. The minute that this low gets taken out, be careful. And what I would have to do now is to take a look, go to the left and look at earlier price levels. Where is the next zone where we had intense participation? And let me see if in fact I can find it on this chart. And okay, well, looks like about, it's been a while since we've had anything of high intensity. But let's go back here and let's pause for a moment. I'm hoping that maybe you'll begin to see the KVT pop up on its own in one of these bars, and if we begin to see some intense activity and prices drop below it, then that's another confirmation for us that we're heading lower. In the meantime, as we just watch together, because as you're all aware, patience is the main ingredient or the main characteristic, I should say, for a successful trader. You got to be patient. You can't let your fingers do the walking. You have to let your mind do it, and you should only execute when you are confident that things are moving in the direction of your execution. So at this point, there's nothing wrong with just waiting, observing, and monitoring what is happening. So in the interim, maybe in the next few minutes, we'll watch and see what happens. If not, you'll have the rest of the day to do it on your own, but this would be a good opportunity for us to tackle some questions. Now, Tony, how am I going to see the questions? Are you going to read them to me?
I'll read them to you if you don't mind.
I don't mind at all.
A couple things I'd like to add. Number one, um, good trading is like a good marriage. You got to know when not to do anything. And
And you got to know when to get out of it.
got to get
If it's a bad marriage,
right. That's
you got
right.
to get out of it quickly.
Exit
That's a
strategy.
good analogy, actually.
Yeah.
It is like a marriage. The
It's
worst thing you could do is to stay in a bad marriage.
right. And when you're doing like if you got a good marriage, it's like knowing when not to say something. Listen, I've traded for my entire adult life, and I've credited risk reward and looking at everything risk reward into my having a good marriage because I measure the risk before I say something. Am I going to get a kick in the rear end, a slap, or a kiss based on what you say? The other way it's like a marriage is um, just knowing where. Knowing that you don't have to always, have an opinion. And many people think they do and have to share it and can't kind of squirrel out of it. The other thing I love about this presentation and your 30-minute bar look at it, because I put a 30-minute bar up and I'm going to add the KVT to separate some layers or levels of volume. But it's a nice, someone added this in the text, that it's a nice drone look at the market, where I tend to get on the ground and take a very micro look. This kind of brings you up in a drone or a helicopter look at what's going on, and I think that's really powerful, John.
Your
So
technique would be very powerful to complement this when it comes to execution, because then you take the analysis from the 30-minute and then execute based on your chart and the dynamics that you look at.
yeah, no doubt. Now I got a question. On this chart that you're showing, when you click on it, could you pull your wheel like towards you or away from you to squeeze the footprint into a candlestick?
Sure.
Just want to see what it looks like.
All right, let's.
There you go. Keep going. Let's see. I'll put this KVT. The
Now,
green.
I'm
Go
going to
ahead.
give you some tips for the KVT. The level 1 you want to set for the number 10, and the level 2 you want to set for the number 20. And make sure you set those right, because the default is some astronomical number. I don't know how that gets in there, but that'll
Okay.
mess you up. And then you want to put 30 days as your look back period. You can do anything between 20 to 50. I mean, you can do 10 if you want, but typically I find 30 days a good number. 50 days works well too, but I prefer the 30. So remember,
30.
10, 20, 30
10, 20.
for the settings in the KVT.
Is that in 10,000, 20,000?
No, 10 is a multiplier.
Oh,
So
okay.
just the number 10 here. I'll show you real quick here. MPH. All right, now we got to go to the KVT. See, the 108, you want to take that out. That'll mess you up. You don't want to use these numbers at all. I think that these were put in there so that anybody trying to use it that doesn't know how to use it cannot use it. But
Good point. That'd be good, actually,
okay,
good
so you
idea.
want to put 10, you want to put 20, and then what you want to do for the look back is 30.
That's good.
And then usually what I'll do, I like two colors from the same family, so that's why I like the dark green, because it just, visually it's easier to see. You could do a cyan and a blue, the lighter color being the level 1 and the darker color is the level 2. And then I like to use the dot custom, and I use 8. So that's the exact setting of my KVT on this particular chart.
Perfect. All right. So that was a couple questions. Another question from Anad. So he's saying that support resistance is the driver of price action. That's actually his question. So support resistance is driver of price action, and he follows that up with, since the footprint is already the volume that's traded, how do you reconcile the order flow with this? For example,
Okay.
volume that wants to trade maybe on the DOM. Does that make
Okay. Now,
sense?
yes.
Okay.
Now, remember, it has to do with understanding how the auction flow goes. The auction, when it finds buyers, it now starts moving higher looking for sellers. And that's why that becomes support, because I found buyers here. So now let's start moving higher to see where the buyer, where I found buyers, so I got to move higher to find where the sellers are. The auction is always looking for the opposite of what it has found. So we know the auction is telling us that in this area we have sellers. This was the last heavy area of selling. So as a result, prices dropped. Now here I've begun to meet with some heavy buying activity. Take a look at this. And it's pushing us back up. Guess where it's going to come back up to? This level that where we sold off at. And it's beautiful now because what Tony was saying earlier when we began our session is a lot of people will show you things after the fact. You are seeing the principles that I have just discussed live before your eyes. I mean, I didn't do this after the fact. This is the market doing it, because the theory that we are using is a sound theory. So we know that these guys were sellers, and we need to come back up and see, are these sellers still dominant or not, or have these buyers now begun to overtake them? And we won't know that until price gets to this area, or if price really can't even make it to this area and starts dropping lower, that means that these guys have started to even sell lower, and that these buyers did not have the wherewithal or the strength to take the market higher. So for a safe long, if you were going to take a position, you wouldn't want to be in the market for a long period of time until we've cleared this level of resistance, if you will.
I like that. And here's the other thing about the auction market theory. So a market's going down until it finds buyers. The best buyers that it could find are ones that are exiting a short position, because they buy it and don't turn into sellers, which make it tough for a market to go up. When a seller or a short covers that short. Now, it's hard to determine if buying is covering a short or opening up a long. But go ahead, John.
That is true. No, the other thing I was going to add to that the buyer that we want is a committed buyer. And so a buyer that's willing to buy here, buy a little bit more here, buy here again, and buy here, and continue buying,
yes,
even if we get into this zone. If I begin to see some intense activity in this area as well, the likelihood that I can take out these guys is much higher. And if you take a look, though, take a look at the volume levels, because we see them in the footprint with the numbers, and take a look at the numbers that we have here. We've got about 9,000. We've got about 4 here. We've got, another 3. So if you add the total at this price level, we've got, what did we say, 9, and then I have about 8. Let's say 8, 9 plus 8. That's 17. And then I have 17 and 4. Let's call it 4. So I've got 21, and let's say 3 or 2, 21 and 2, so we got 23. So I have about 23,000 here at this price level. And now I need to take a look at, do I have anything that looks similar in terms of momentum and potential? These numbers don't quite look, here I have one, I have about 7, I have about 7. I have about another 4. So if I take a look at my high volume nodes here, they look to me number-wise weaker than what's been happening in this zone up here in the sell zone. So again, my inclination would be that we are going to drop, that this was a mere retrace, and these guys are still dominant. But this is the voice of experience speaking more so than anything else, and we have to wait and see what really the market does and tells us.
No, that's great. The two camps are committed buyers because they don't turn into sellers in 10 minutes, and
Right.
short covering buyers because they're done. They're not turning into sellers. They're not long. Either
Exactly, because
way,
these guys could have been profit takers. They're taking their profit, getting out. They shorted up here, and now because you see, we're also at the value area low, so we don't abandon our profile altogether. If you notice, I tend to use the 24-hour profile more so than just the day session. I like to use the full day because I consider a day a full trading session, and the day session is the bigger, more active part of it. But I really like to integrate the two together. I don't sort of put more weight on the one. The two work hand in hand, and so the profile parameters that you see on my chart are the 24-hour parameters. Are there any other questions?
I got one more for now. Right now, it says it's a really nice modular perspective. Could you talk about bid offer absorption or divergences at these support resistance levels?
Absolutely. The bid offer absorption really is more of a order flow observation, and that usually you can tell through the accumulation in terms of when we begin to look at the imbalance. I don't tend to look at that too much. I look more at the overall big picture and sort of use aggregates rather than the more finite. If you are doing more intraday and more quick trades where you're getting in for just maybe 3 ticks or so, that's when the bid absorption and the bid offer sort of ratios start to come into play. My eyes are getting a little old for this, so I don't look at that too much. And you need algorithms to really be able to track that very carefully and very accurately. But it can be done.
No, this was a great session, John. I appreciate you coming. You're doing the best job out there for profilers and the actual application of it. Everybody
Well,
else.
thank you, Anthony. I appreciate that. The one thing I will point out to you now is take a look at also the 200 moving average on the 30-minute chart. We dipped below it. We're coming back, and it seems at this point in time, it seems to be creating a resistance level. That could change any time, any minute that could change. If we manage to break above it and close above it, then we have a different picture, and things could change.
No, I like
so
that.
Keep that in mind.
I like that.
Go ahead, Anthony.
No, I was just going to take the screen back. Is there anything else you'd like to show?
No. The one last thing that I do want to add is the fact that it's more than just the profile. There are a lot of different elements and pieces to trading, and the more versed and the more familiar you become with the different pieces, the better judgments you're able to make, and the better trader you become. That's it. Thanks for listening.
No, our pleasure, and everyone's kind of chiming in, thanking you, John. I know you can't see that, but everybody appreciates it because it's not garble or it's not just guru stuff or definition of stuff. It's application. And a lot of people will finally get to the last piece or the first piece last. And this is one of the first pieces, including community. So one of the things I'll kind of just add to John's presentation and wrap it up is the one of the last things people do in trading, if they ever get to this point, is finally get into a good group. And I don't mean a prop group. I mean just a group. And if they get to that point, if they can survive through all the bumps in the road and the distractions they face. Well, I got into that group at the beginning of my career. And I draw this analogy just the other day. If you're running a business and you're the salesman, the marketer, the product developer, the billing person, then you're not going to do any of those great. When you're billing, you're not selling. When you're selling, you're not marketing. When you're marketing, you're not doing anything. And when you're doing any of those things, you're not developing and making your product better. So if you think that you're going to sit in front of a screen and cover what's important to know, short-term, medium-term, long-term, by yourself, including news events and numbers and what it means, and just good information, not too much, but enough, where you've got plenty of eyes and a marketer in a marketing department, sales department. If you don't have those things, then you're going to wear all those hats yourself and do them all great, because you're going to have to do all these things really good, right, to have a successful business. So hard to do it by yourself. And it comes into that. That's where the group, the power of group comes from, including these contributions that Dr. John has done for us today. Let me take the screen and show you really quick my.
You got it. Send me the request. Do I release
No,
it? Oh, okay.
I'll just take it from you.
Okay.
And you should see it right now. You guys see
Yes,
it?
I see it.
All right, so at the screen on the right, you see the volume imbalance. This is just a 4P now, so a real micro look versus what you've seen from John's chart. But you see the reds, they come in, and they're kind of getting like smashed. Forget about the edges of these bars for now. Just you could see if I draw a line through the reds and then a line through where the greens come in, they're kind of like getting pressed together. So it's due for like a breakout. But the bulls don't win until they get through this high volume area, which John pointed out on his 30-minute chart. And they get through this, what I have is a purple level at this point of some near-term resistance. That's where the bulls could have some opportunity. Now, there are near-term buy stops above this purple line. You could see them starting to flicker out now. Would I want to be short here? No. I would want to be long and get out for a small winner with some profit and wait to see if the bulls could claim victory, but they're going to have to get through that area John talked about. I wouldn't want to be short. If you're long-term bearish, that's the right call, medium-term bearish until it gets above this purple line I'm drawing. But you want to execute a bearish bias maybe when it's a head fake up to attract some longs and then jumps back down. Now you've got some sellers baked in. That could be the sellers to push us back to yesterday's close, which is that dotted yellow line. But right now it's just like the bulls and the bears short term are almost like a press or a vice that are crunched together, and something's kind of got to give. And you see the short-term bears are puking. Very short-term bears are puking. You know where they want to go, and they got to punch it through all that resistance of all that inventory John pointed out. So good stuff, John. Thanks again. I really appreciate it.
You're very welcome. It's my pleasure, and best of luck to everyone with their trading.
All right. Thanks again, John.
Take care.
I'm just going to clean up some of these. If there's any questions, I'm going to look back on the panel for me, and I don't see anything. John is you could tell he prepares for it, and he's a good presenter. All right, let me add on to this for those guys. Right now, remember, it's April 21st. So Josh is going to share a couple ancillary markets that's helped him trade the bonds and notes. Now, these might not be great if you guys are listening on a recording in the future, but those live, you see this market just take out those buy stops out of this consolidation. It's almost like they waited for a presentation to end, and then you could jump back in and buy it. So these are some ETFs that Josh is using to trade some of his treasuries. And these aren't like new things to look at. They're out there, but to watch them, it's helped him get into trades. The TLT, which is a 20-year ETF, he says at one point in today's session, George mentioned that he was a bit confused by the bond price action. He wanted to share that if you pulled up the TLT, it trades millions of shares a day and very, very frequently leads the bonds in the short term. Buy stops and sell stops can be identified using a P&F chart. It's a slippery instrument, so a larger P&F setting is recommended. It was buy stops coming out of the TLT today that led a big bond rally in today's session. That's when George chimed in, and I thought that it might be helpful to share. Well, it is helpful to share, so pull that up. It's something that you could pull up if you have data for NYSE, no matter what charting platform you guys use. How many guys used, well, hold on. I'll wait that for a second. You could see this market come out, buy stops in that purple zone. It'll play around in this purple area right in here and probably hug around these POCs, which it's built value. But I'll stop the recording. Again, that symbol was T as in Tom, L as in Larry, T as in Tom.